The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. As we start this show off, as always, we like to meet kind of around this time. If I can find it.
The following takes place between 2 p.m. and 3 p.m.
The S&P cash is up, we'll call it 7.75 points right now, which is up about 0.35%. Volume is light and tepid, 2.15 billion shares with volume up here. If this thing was either going to confirm a breakout of the previous highs and or give you a high that would come back up here and get retested, you do not like the volume out here today. Does that mean we can't go higher? The answer is no. The chances of going higher or even closing higher, at least tomorrow, are getting rather slim. In fact, the chances of a close above 2156 on the S&P cash is about 7% right now. Yesterday it was about 10%. It becomes incredibly hard to hold markets up with light volume. Not impossible, but at some point everybody in the world gets bullish and there's no one left. And I think we're kind of in that thing where people are doing literally anything to try to make a dime. That makes all the markets go up. But guess what? What happens, like musical chairs, when the music stops? And MTV used to have some horrible documentary series, When the Music Stops. Anyway, this light volume. We had some other things going on. Someone emailed me. You can email me also at path@tfnn.com. The question was, somebody, I guess, pointed or put something in the den. I never saw it. But I did go and dig up the comments from a trader that's been around forever. That's Art Cash, and I guess he was making some comment that's made the rounds today about conspiracy theories and markets trading overnight because, of course, futures much, much easier to move things around, but then limited volume throughout the middle of the day and then all the volume at the end of the day. And I can kind of understand where a lot of people can easily believe that, especially if you traded in markets for the last, at least as long as I have, which is starting in 96 and full-time in 98. But there was always kind of some intraday trading. The intraday trading now is at a snail's pace. But I saw that actually start and that phenomenon start long before what a lot of people would call quantitative easing. It actually started in 2007. And the reason why is that with a change in laws, it made the high-frequency traders very profitable to operate during the day. And as that started to happen, those, especially the big hedge funds, big hedge fund managers, decided to start working and trading on other venues like ETFs and actually making direct trades that were set up before the orders ever hit the market. And that was just an attempt to keep the high-frequency traders out. I don't see that that's materially changed since and after quantitative easing. I think it's become worse. So the thing is that, yeah, these guys that are the big men of Wall Street have a much bigger incentive to push the market around and during the night to set things up for them. And why you see a greater preponderance almost every day of the last 30, 35 minutes of trading where these trades actually go off, but they may have been prearranged, kind of like a prearranged wedding. Someone was talking about that today. I don't know why. Anyway, prearranged wedding, and those deals come together late in the day. But it's not uncommon to see the last 30, 40 minutes of the day have a third of the volume of the typical day come in. Some of those trades were actually made in dark pools and hidden early in the day, and or are block trades that come out later. Like I said, I'm probably the biggest conspiracy theory. I love the X-Files. But I don't think you can put together cause and effect on that. I think it has a great deal more to do with these hedge funds and other guys not wanting to start an avalanche by heavily trading, and having high-frequency systems front run them. And a lot of people would think, well, if they trade in the last 30 minutes, aren't those high-frequency trading systems going to outrun them? And the answer, for the most part, is no. The key to high-frequency trading is that you stay kind of out of the first 30 minutes and you stay out of the last 30 minutes of the day. What you want to do is have a sure, or as close to a sure bet, even though it's a tiny penny per share. You've got to know that that's out there to begin with. And literally, you can find, if you had traded in any size as a high-frequency trader, you could find yourself a penny or a nickel or even a dime out almost instantly as these big orders hit. Same thing for the morning, although I have a feeling that high-frequency trading is a little bit more, starts a little bit more earlier in the morning, but you pretty much see those huge high-frequency traders stay out late in the day. You can always check out I want to say Nadex, I always say that, Nanex. And there's a great blog and a Twitter feed from one of the guests that I've had on here a few times, Eric Hensetter. He's the one we talked about that got the $750,000 award for basically showing everybody where the dead bodies were buried by these high-frequency traders, and getting not only some light on the subject, but actually helping start the new exchange that will have kind of a time fuse on it, so high-frequency traders aren't going to be able to operate with the same impunity as they've had before. I think when I talked about, when was that, 2 weeks ago, 3 weeks ago now, I said that long-term is probably the biggest change in this market, and could mean, and I think hopefully mean, that we bring back traders throughout the day with a little bit more verve and vitality. But these very flat trading ranges of 1 or 2 points over hours kind of started just before the meltdown. And anytime there wasn't a lot going on, it's been that way. But 2007, that Reg SHO changed everything. We'll be back after this break.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And it's all just a little bit of history repeating.
It is a history repeating in 1784, the earliest known advertisement by American stockbroker Joshua Eaton of Boston announces in the Massachusetts Sentinel. Public securities of every denominations are negotiated business on commission, transacted with attention and punctuality, and every favor gratefully acknowledged. That last one's got me kind of a little off. No Wolf of Wall Street in there. Or Wolf of, what would it be in Boston? What would be the Wolf of MIT? No, probably didn't exist at that time. Wolf of Nashua? Nothing on that. Okay. But they've been around for a while, although they are kind of a dying breed these days, aren't they? The Wolf of Cambridge. Well, wouldn't that be Basil? Isn't he the Wolf of Cambridge? Around there, isn't he? Yeah, we got that out of the way. I wrote an article, what was it, last week? Everything starts to run together now, but there was a lot of discussion on Tesla today on the Financial Infotainment TV. One of the only things I decided to fast forward through and read the text, and then I slowed down. CNBC has Phil LeBeau, and, you know, I loved him in Hogan's Hero, LeBeau. I kind of vaguely remember him maybe a little lighter. Maybe he put on a few pounds. Anyway, old Mr. LeBeau was talking about this with the people from Consumer Reports, and it's what I tend to see for a while. I don't think it has a lot to do with the stock price today, but it is very interesting to watch. I've seen this phenomenon before, and that is if your job relies on having Mr. Musk come down and talk to you, it's almost a duty that you have to defend him instead of just asking the Consumer Reports reporter why they suggested that maybe they rechange the name of Autopilot to assisted driving. So people don't think that they can just take their hands off the wheel. One big thing that the lady from Consumer Reports did bring out is that Tesla is not the only company with this assisted driving system. Every other one of them means that you have to put your hand on the wheel and keep them there. If you took your, it'd be kind of like maybe an optical sensor that knew that you were on cruise control, but you took your foot and put it up on maybe in the passenger seat. Maybe that's probably not the best thing to do. So maybe they'd have a sensor up there to make sure that your foot was at least somewhere around the brake and the gas. But the other autopilot systems all have a sensor to know that at least one hand is on the wheel. And I thought that was very telling. This is going to become a much bigger deal. We've got 3 big accidents now. But any of these cult stocks, especially when they rely on a leader who's kind of culty himself, Musk, they don't like to get a lot of hate mail. Before the days of trolling and internet trolling and everything else, although it started, I can remember the people talking in 1970 or 1996 talking about all the hate mail that they got when they would say anything slightly derogatory against iOmega. This is the #1 cult stock. I'd pull the trigger right now if it wasn't for these culty guys, because they are all over this stock. But as the worm slowly turns, it's no different than Apple. Apple was the most culty stock before this. Had a lot more under the hood though than that Tesla. Tesla has, it's a company that sells 50,000 cars. When most people build, or most companies build that in the first day or two of the year. So it is kind of tough to get too excited about a company that's trading at, 250 times earnings? But what else can you say out there? But you'll see these kind of drip, drip, drip of articles. And I was probably, 9 months ahead on Apple. Looking forward and knowing what inevitably was coming. This is a little tougher to trade because, of course, these people rhyme nor reason. Doesn't matter whether Tesla cars all went rogue themselves, started driving down the street without a human in it, and ran down many people. They'd all be talking about it tomorrow. But the only reason I spend some time on this is it's a very teachable moment. There aren't a lot of times when there's just a pure cult play in the market, and Tesla is a very good one to learn from if you haven't been on this trading that long. Watch how it trades, see what you thought it should do, what happens. When everybody becomes insane, there's nothing worse than a sane trading system, and it can become very uncooperative. If you know what I mean. Okay, we got a couple of emails out here. Let's get to them. You can, of course, email me at path@tfnn.com. First one is Willie. Willie does not say where he is from. So it's Lutz from you. I don't see any address. Willie is asking about what I think about Dave & Buster's. Any kind of retail place has kind of an upper limit for me. I know that there's a certain amount of profit margin that can be had, but Dave & Buster's probably going to do well. I don't see a lot of change out here. I don't see a lot other than the fact that this thing has gone rather high. A little bit of a reversal out here, still above the 3x3 displaced moving average. Today's light volume probably tells you more than a lot of other stuff that you had. You got to kind of like this very light doji pattern that went on from the 23rd of June all the way to the day that it started moving higher on the 8th of this month. I guess the biggest problem with me looking at a company like Dave & Buster's is just how rapidly could they expand. Is there a chance that this will become as wildly popular as Pokemon? As even wildly attractive as Intel chips in every computer? And that's it. There's a very finite amount of business, finite amount of places that you can put a Dave & Buster's. I'm going to say the top 50 markets, maybe the top 60 markets in the United States. I don't know how well this translates into the rest of the world. I kind of think that this is a good idea, good business. If you got in on the ground floor, it's great. I'm just wondering how high is high on a business model like this. These things are only going to support a certain amount of business. And that's it. Maybe my argument is more fundamental than charts. Chart looks okay here. You could probably pick it back up if the market goes higher, but I'm not all that pumped on the market right now. We'll be back. When we come back, we're going to look at yet another stock.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Had a question from one of our gentle listeners. Says, hi, Dave. I'm an Eagle at 34 cents to hold for a while, go in and out of this beat-up sector. Wants to look at a stop price. I'd have to say it's the bottom of this big candle is your risk reward, which is 23, what is that, the low of the day, 23 cents from the 5th. That's what you would look at and would have had to look at to get in on that. And that's why this trade would be very tough for me to pull, even if I had to buy a gap where the thing gaps up 40% one day would be problematic. The biggest problem, and we made a god-awful amount of money on these in one trade in about, I don't know, 4 or 5 days. And I thought, you know what? I'm going to be buying these on the pullback. And this has been a while ago. And these things, all the iron ore, all the prices, all the copper, everything started to move. And guess what? Everything in this sector just continues to get worse and worse and worse, at least for stock prices. And I kind of believe them a lot more than I believe all the ideas that everything's moving in iron ore and or across the seas, because even if prices were down a little bit, they'd already been down. That was already in the stock price. Why can't these stocks move at all? I understand the trade, certainly on that. And I understand that basically this is a lottery ticket. Hopefully you didn't put a great deal of money in it. But you know what? It's just, I don't know what to tell you about this one. You basically, it's like having a hand grenade with the pin pulled out. This thing could go off and you could make a bunch of money, or you could lose it all. And that's the way you have to look at this. Normally, I call these non-expiring options. That is, i.e., you buy this thing, it's a non-expiring call unless the company goes out of business. Not a bad idea as long as you understand that that's the way that you bought it at the beginning. Just because these companies are all running out of money at an incredible rate. Still, even though the Baltic Dry Index has gone up significantly, it hasn't hit the bottom line of any of these companies. Even when a few of these things have gone bankrupt and the ships are sitting in there, it still hasn't helped a great deal of these companies. Eventually, you're going to be the last buggy whip manufacturer, and I think that will be the one in there. I was looking at SALT the other day, S-A-L-T, and I'm thinking, can I make anything out of this one? And the answer was yes. I can make a great deal out of this one, and it's back to my old asymmetrical triangle, and that's why I kind of really have a problem with this one. Let me get it here and get some drawing tools up here. But what you kind of have here is hopefully everybody can see that well enough, is you've got this asymmetrical triangle. I can see, as long as you understand that you have a bet on that's like an option and you don't have a great deal of money in it, don't see much going on. But to me, a lot of these are set up with this asymmetrical triangle. And this is yet another good pattern to react to, not anticipate, unless you're going to be buying options. And at $3 or a quarter for the one you're looking at, how do you justify buying an option on a quarter stock or a $3 stock? Isn't that an option all in itself already? I bought options that were much more expensive than $3. So to me, you would have to treat these stocks very much like that. Even in Scorpio, when we look at it in the same sector, let's zoom out here. This thing has come back up to this high volume down day, which was the 3.7 million shares on the 15th. And we've had 600,000 shares yesterday, 640,000 shares today. It's just kind of gone up to this gap down, and that's all so far. Wouldn't have been a bad trade to get down there at 264. I just don't know how I could have pulled the trigger. You're not really testing against anything. It's, I don't know, kind of a shot in the dark. Is that a best way to describe it? So I can understand as a lottery ticket, that trade doing maybe even getting into that trade. But let's do this. Let's go back and look at the key statistics, times and sales profiles, earnings, balance. Let's look at the balance sheet on the Eagle. This is the first thing when you see these 30-cent stocks you want to look at. Okay. We got the beginning of 2015. or the end of beginning, let's call it 2016. So total revenue, pretty good. Gross profit, selling, non-recurring, others, operating expenses. Man, if you look at that loss compared to the gross profit, it's the same. So they're bringing in just as much money as they're losing. And that is why they are a 30-cent stock. Now, that was at the beginning of the year, and things have improved. But normally you would have seen other people getting into these things and improving. And see if there's anything else here on this, on Eagle bulk shipping. That's about it. I mean, it's a 17, you can buy the entire company for $17 million. That's kind of tells you a little bit right there. If there was something in this stock, do you think someone would come in? You know, that's like a drop in the bucket from one of these big funds, especially private equity. If there was anything in this company, do you think they would have stepped in by now? And that's it. It becomes a bet that maybe these things turn around before they go bankrupt. But I don't know. I think that there's some better ones if you're not looking at a lottery ticket. And the same thing. I just see a great deal of that asymmetrical triangle on Scorpio. SALT is that one. You don't want to watch that one. The first breakout, 75, 80% of the time, should be the false breakout. So you would like to see, is this probably go back down to this thing around the 250 level and then come right back in and above that 275, 280, maybe $3 level and set up a bottom. And then you've got to run for 582. And not just this stock, but I mean, this particular pattern, I've seen lots of them in the bulk shippers out here that always make me wonder what is going on. Where's the disjointment between all the movement in copper, all the movement in iron ore? You know, we've had the biggest single day ever in China for iron ore price changes. And if that was going to transplant itself into this, shouldn't you see some massive volume? And we really, you know, you had a little, but there wasn't a great deal out there. I may have spent too much time on this one, but it is interesting to me because I've been trying to figure out if there is anything in this sector. Got a lot of earnings. We went through all of them yesterday that we could see. Today, Delta Airlines kind of giving back. It's a little pop higher out here today. Doesn't surprise me at all. This market is extremely rich. And we'll talk about that when we come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. Delta Airlines out and talked a little bit about what they were doing. But, yeah, I just didn't – a little gap up today didn't seem all that exciting, at least to me, compared to the earnings. Little sell the news out here, I suspect. Also talking later on in the morning, had a few more discussions about the earnings. And they're kind of saying, yeah, you know what, maybe that turmoil in Europe will cost us some miles back and forth. And it kind of put a little weight on Delta Airlines. CSX came out early yesterday. And somebody made a comment in the den, and I can understand it. It's kind of stupid that with everything that we have going on now, that earnings don't come out at the appropriate time. But the reason they don't is there's no big fine. If there was a giant fine that came out, and people actually cost those folks lots of money, it would. The only thing that the SAC does is look to see if anybody had some positions set up and knew that someone was going to release the data early. But there's no penalty for it, so it doesn't really cost anything. There have been some times when people have done it on purpose and said it's the old honest mistake, but when they dig in there, they find out that people had just bought 1,000 calls on the stock. And you know, it's one of those things where we'll just go ahead and run it here before the end of the day. No chance hoping that maybe JP Morgan or something in the morning whiffs on earnings. Let's just go ahead and take our money now. And, you know, that could have happened. The problem is if the people had been in the stock for a while, there's no smoking gun. It is one of the things in the market that continues to tick me off, especially since there are great libraries, and Microsoft has a bunch of them. I would assume there's some for others. But there are some great libraries. The one I looked at for .NET has contributors from all over the world to make sure that you always know the correct time. But when you track these back, you normally find out that the companies on the West Coast and the company that releases on the East Coast, and they say release this thing, they don't know it's an earnings release. All they care about is it's a release. So they don't know that they're kicking out something that's an earnings release. It could have been any kind of release. So to me, the thing should be that the company should be responsible for their own releases and not stick it in a third-party company's hands. They could put it on Twitter. They could do a bunch of other things. But now on CSX, things getting a little bit better, a little better earnings call. I listened to a little bit of it, read the transcript of it, and they're mildly more optimistic. about crude transport and maybe getting a little bit of that business back. I think that's kind of the saving grace of this. They thought maybe coal shipments that were kind of weak would come back a little too. I don't know how much of that is the truth, especially going into the election year where we've got a lame duck president who literally hates coal. Whether or not we're not going to see a few more surprises from the EPA on that already. Nice bounce. I don't know if you can make a great deal out of it. And of course, we got a few more, as we said, going into next week. Wanted to see how some other ones going. The guy from that bought Eagle is Lee in Tampa. He is not from Lutz. Agilent Technologies, nothing like AGs, T's, and C's. What is it? Acetylene, guanine. I used to know them all by heart. Don't know them all by heart. Anyway, all about the DNA out here. I was looking at this one come back in. Kind of interesting. 1.5 million shares on the 23rd. Yesterday we had 2.3 million shares. 1.9 million shares today. Wanted to see how some of these were coming back into gaps that they had previously. Had Akamai. Looking at some of these as very possible ABC downs if the market turns here, and it may not turn till Monday. I just don't see how anybody could be putting money here at risk. Let's take a look at, if that's an ABC, that is one whale of an ABC. Akamai's A point would be October 27th, $76.39. That would be 3.7 million shares. Gets down, though, and has a high volume low on February 9th. And, you're going to see 80% of these high volume lows retested within 6 months. So the question is, when can you be in this stock? Anywhere close to earnings, anywhere close to anything else going on? And the answer is I'm always very aware of these high volume lows. February 9th, 6.4 million shares at $39.43. So there's a very good chance that these things get retested. Now, you've done a 50% retrace up to today. So the question would be, are you going to try to get more of that? What I would tell you is that at $57.69, a one-to-one ABC would take you to $20.73. And that is got to be the big worry on a stock like this. I don't see a great deal that says pull the trigger right now, but certainly I wouldn't be throwing money at a stock in this range. You're back up to the congestion zone that went from early or late February through early April. It kind of pulled back a little bit. It's coming back up here. But as far as you can tell, this thing is kind of the patterns that I like to trade to the south. And, man, that would be one whale of a move. 57, let's call it 57 bucks to 40 bucks. So good 17 bucks there. But monster ABC to 20 bucks. When these stocks like this break this hard from 76 bucks to 40 bucks, they have a tendency to make me think, where's the rats or cockroaches in this? When you shine the light on it, you see one cockroach, there are a bunch more. And it's very tough for me to see. I know about this company. I was kind of very amazed to see the weakness before. Now that I see the weakness and we've come back a bit, this one looks very interesting to me to the downside. I'm trying to remember when earnings are coming up on it because I have looked at it. July 26th, so we're not that far off. Unfortunately, almost all these stocks are either bouncing higher or literally having their limbs fall off on earnings. And I don't know, maybe put on this into earnings may be something that I look at. Another one, we talked about the movement in the bulk shippers, which has got me very nervous out here. But I also saw some smaller movements in some of the steel companies, and they make me kind of wonder about what's going on out here. AK Steel, we'll look at that when we come back. And we'll look at, we're bigger than U.S. Steel when we come back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Now I'm mad. I couldn't find my We're Bigger Than U.S. Steel, Michael, from The Godfather. I had it at one time. May have deleted it by accident or something. Now, what else can you say? Anyway, AK Steel, wanted to see how this was doing. You had 11 million shares at $5.24. You had a nice, huge day that instantly reversed with 30 million shares back on the 8th of June. Yesterday, you came into that with 15 million shares, so a sign of strength, right? And then instantly pulls back out here. Now, that's on the one side. On the other side, we've got U.S. Steel. I wanted to see something in U.S. Steel. And one breaks above with volume and then looks like it's pulling back into the trading range. The other one is the April 20th high for United States Steel, $20.55 with 20 million shares. We get into it with exactly 20 million shares yesterday. But today, a little hammer candle out here with 13 million shares. So no sign of strength, about the same volume. And energy on the way down is just slightly more than the energy on the way up. Really looks to me like a much more of a possibility of a consolidation range than a breakout. But in the next couple of days, you should probably be looking at the United States Steel and AKS and see what's going on here. These things are not as vibrant signals as you would want if everything is going to the moon. So we'll continue to do that. What else do we have going on here? Got some other stocks. CBS, very, very light. Of course, the broadcasting system company. And maybe, do I have enough time? Yeah. Very interesting to watch these companies because I talked to, I spent a lot of time in television and broadcast on the engineering side, not on the broadcast side, but a lot of those guys hang around and together and talk, especially when they're sitting around sets waiting for rewrites, the writers, everybody else. And one of my favorite shows of all time was The Rockford Files. And I was always ticked off that it was like number 2 or 3 in its last season, and it got canceled anyway. And the reason is the stingy bastards at CBS tried to screw over the star of the show because he got production rights after the 7th season. So suddenly a crate that needed to be busted up for a crash scene that cost them $100 the year before was now suddenly written in at $1,500. They basically went after him and cheated him out of a lot of his money, James Garner. And the lawsuit went on for 15 years. It was like a big deal in Hollywood. He finally got his cash from them and a huge to boot, but they made him go after it for 15 years. But when you look back, the reason that they were such horrible folks was that they were trying to get every dime they could in to make the company look good. It didn't matter if they had to cut off their nose to spite their face. CBS is now in that same kind of war right now with many of the people that it's dealing with. Even Judge Judy is going to war with CBS and going to court. So I just I can't draw parallels exactly, but very interesting to come out here and see CBS with, 1/3 the volume, testing its previous highs. Maybe things aren't doing as well as they could be. Anyway, the next 2 hours, Tom O'Brien, the #1 guy we have here for Pokemon. He'll take a peek or two at your stock if you call him. See what I did there? Interesting. See you tomorrow, same bat channel, same bat time. So when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.